Everyone's asking the same question right now, and that is, what's the interest rate? That question has a lot more answers than just a number on a screen, and that's what we're gonna get into today. Today I'm sitting down at one of my favorite local spots called the Rex here downtown Pensacola. It's a coffee shop that has amazing coffee with my great friend and trusted lender, Rob Benson. We're gonna break down what's really happening with rates, how that impacts you, and why waiting might actually even cost you more than you think. Well, hey everyone, it's Sean Killingsworth here at the Emerald Coast, and I love helping families or investors find properties here, a little piece of that beach life that you can get here at the Florida Panhandle. And so hopefully today, as we talk about purchasing homes, whether you're looking to purchase one now or in the upcoming season, and you're curious on interest rates, stick around. Hopefully this will answer a few questions that you might have. Well, hey, so anyway, we're here today with my good friend and one of the top lenders in the area named Rob Benson. Thanks for joining me today. I say maybe one of the top. You may be the top. I don't know.
I haven't looked lately. It could be.
Well, you need to check it out. Let me know. But he's definitely been great working with us and our clients. He does a great job as far as getting a home from start to finish, as far as close. And hey, so we're here at the Rex. I noticed you got a coffee. What are you drinking today?
I typically do a red eye, which is black coffee with a double shot of espresso.
Oh, so
it's a whole lot of caffeine first thing in the morning.
Right.
Really gotta kickstart my day.
So this video might go a little long, longer than what we were planning.
Maybe.
Yeah?
Maybe. Yeah.
Nice.
Yeah.
So if somebody's coming, what would you recommend them try here at the Rex?
So honestly, the lattes here, they do like seasonal lattes. I think there's like a pumpkin pie, not pumpkin spice, but pumpkin pie latte, and people seem to love that. They're also kind of known for the Biscoff latte, which I'm not really a latte person, but I have tried the Biscoff and it is fire. So highly recommended.
Yep, Biscoff is excellent. I did try that one. Very sweet if you like sugar. I went with just a regular iced latte today. So we're here sipping some coffee, talking about mortgages and mortgage lending. We wanted to get to one of the biggest questions that people have right now, and that is, what is the interest rate? So I have a handful of questions for you today. I'm gonna try to hit you hard with some of these hard questions. So then that way we can get people to hopefully understand when they're talking interest rate, what that actually means. So we're gonna dive into it right now. So we're gonna start with the big one. People ask all the time, what is the interest rate? And so you get that question. I know I do as a realtor a lot. And so, hey, what are we looking at for interest rates right now? What does that question really mean, and how would you define that to somebody?
Absolutely. It's a great question, Sean. So I would say as a mortgage lender, that's probably the number one question, and sometimes the very first question we get asked when we start talking to a client. What is my interest rate? And so unfortunately, this is probably one of the biggest miscommunicated and misadvertised things in the entire mortgage industry. So what I mean by that, Sean, is we have a lot of clients who, they bank with a big bank or maybe a really large credit union or financial institution, and maybe they go onto their online app. These are real, situations, examples, and they see on that app, like, my bank is offering 5.5% interest. That is my interest rate, right? But unfortunately, that's kind of like getting a diagnosis from a doctor without them having done any of the diagnostic work. And we see this all the time. It really hurts expectations and people's expectations for the process. So truth be told, there's actually about 42 different factors that go into coming up with your interest rate. So if we're just to talk, what are the average interest rates today? And I say rates plural because there's really just not one rate, right? There's multiple loan programs, and that's really where we start. We have, of the normal conforming everyday loans people typically get, conventional, FHA, VA, and USDA, and each of these programs all have their own average interest rate that people are being given right now. So what is it, November 12th of 2025 right now, the conventional loan average interest rate is 6.31% as of today. The VA average interest rate is 5.85% as of today, and FHA is about 6.13% as of today. So already the three of those are different. However, I would go into the factor number 2. Now remember, 42 different factors, so there's a lot of things. Really what it comes down to is, what does your lender tell you your interest rate is for your situation? But down payment has a really big impact as well, right? Somebody putting 20% down on any of those loan types versus the minimum down payment might get a much better interest rate than the person making the minimum down payment. And the third is your credit score. Obviously, a person with a higher credit score gets access to the top tiered rates, meaning the lowest rates at the lowest cost. And then a person with lower credit might have to pay a little more in fees for whatever loan product or get a slightly higher interest rate. I would say the fourth most important factor is points and fees. Sean, this is like one of the things I find people are the least educated about when they set out on the process to get a mortgage and get pre-approved to buy a home. So what I mean by points and fees is, for instance, let's say we can just kind of role play here. Sean, you're the client and I'm the lender.
All right.
You reach out, you're asking what is my interest rate, you tell me you have really good credit, and I might say something like, Sean, the average interest rate as of today that you're able to get is 6.31% on a conventional loan. However, you have the ability to buy down your interest rate. Now, we're not talking about an adjustable rate mortgage. This is strictly 30-year fixed. Buy down your interest rate to maybe 5.5%. And that's a realistic thing that you can do in this market. However, obviously, the way you're doing that is you are increasing the amount of fees you're going to be paying as part of the closing costs to get access to that lower interest rate. So if it's okay, maybe 3 questions that would be helpful for any client to ask their lender about the interest rate, right?
Yeah, let's do it.
So I would say number 1 is based on my loan application, which is comprised of, all the debt to income history, your housing history, credit history, and all those factors. Based on my loan application, what loan type seems to be the best deal for me in my situation, right? That would be the number 1 question I'd ask. Number 2, what is the interest rate with no points as of today? And do I have the ability to buy down my interest rate with the loan program that is best for me? The third question I would ask is there an alternative loan program that I might be able to get access to with a lower interest rate? And the reason I bring that up is sometimes people are really set on a certain loan type. Maybe, you as a client, Sean, your dad told you, Sean, conventional is the only way. It's the only loan for you, son.
Right.
Don't get stuck with an FHA loan. But your dad may not know, even with the best intentions, that FHA loans typically have like 0.25% or lower interest rate. So sometimes, even though you may reach out to a lender and request to be pre-approved for a certain type of loan, it always is a good thing for you to ask, is there a loan program that may be able to offer me a lower interest rate?
That's great. Yeah, I think that really clarifies that a lot. All right, we'll dive into second question, which is, so a lot of, actually number 3 on here. But a lot of people are asking, it's kind of like the modern day, how's the weather outside? People are talking about the Fed and the Fed rates. Hey, I noticed that he's going to be announcing it's going to go down by 0.25, and everybody's speculating that. How does what the Fed says in their meetings, how does that actually affect the numbers of getting a better interest rate?
Fantastic question. And honestly, this is a very hot topic right now because we've had a lot of recent Fed meetings and Fed rate cuts. So the first thing I will say is I want to definitely establish there's a very big difference between the Fed rate and mortgage rates.
Okay.
They're 2 very different things. Now, unfortunately, a lot of times this gets really misconstrued, or people kind of see them as one. And so the average thing we hear from a client is, I saw that the Fed cut the Fed rate today. That definitely means my interest rates are going to be lower, right?
Yeah, you would think.
And it's kind of very crazy for a lot of people to hear this for the first time, but historically speaking, when we look at the data, the last 3 times that the Federal Reserve Board has actually cut the Fed rate, mortgage rates have actually gone up in the 1 to 2 weeks and sometimes even longer periods immediately after that.
Okay.
And so here's why. The Federal Funds Reserve rate is basically a rate at which banks exchange money and leverage debt on an overnight basis. It's kind of a really detailed, complicated description that I would have to give, and I don't want to talk about them for 50 minutes. But essentially, it is a tool that we can use to kind of leverage national debt and inflation, right? So that's really a summary of the Federal Funds Reserve rate. Now, obviously it gets a lot of media attention, and Sean, I would say as a tactic, Historically, in the last 2 years, people that have gotten the best interest rates in the entire year did it, and this is a bonus piece of info, when the Federal Reserve Board announced that they would be cutting the rate, right? So you have a public announcement, typically Jerome Powell has came out and said, hey, it is 80% likely we're gonna cut this federal funds reserve rate. And what happens literally the exact same day, mortgage rates start to go down.
Nice.
So as a tactic, it is really good to pay attention to the news and what the Federal Funds Reserve Board is talking about and kind of like meeting minutes and what they're releasing to the press, because that can actually give you access to lower interest rates if you're paying attention to timing the market correctly. Now, in terms of what is, the relationship, because we've established mortgage rates and the federal funds reserve rate are two different things. What's the relationship between the two? Well, as I said, the federal funds reserve rate, while it serves many purposes, it's a tool to kind of control inflation.
Okay.
Well, mortgage rates are actually one of the main factors that drives mortgage rates, whether up or down, is inflation. Things like the CPI, the Consumer Pricing Index, and a lot of different tools like jobs reports. There are measures of like unemployment, things like that in our country that show, is the economy booming or is it slowing? That has a major effect on mortgage rates. Also the 10-year treasury and the bond market. For any of our people who pay attention to the stock market really closely, when stocks go up, typically that's not great for mortgage interest rates, right? Mortgage interest rates actually go up. People would say the mortgage rate actually worsens. But when stocks go down or the stock market starts performing really poorly, I always like to say when bad things happen, mortgage rates start going down. And so the reason for that is when inflation starts going down, well, that's the point at which mortgage rates actually start to fall and perform well.
Okay, that's super helpful. So question number 3, can you walk us through some of the differences on interest rates between, let's say, a traditional 30-year fixed, if I'm even saying that right, fixed
Definitely.
loan, and compared to some of the other plans, maybe an adjustable rate type of mortgage? When would those be helpful for somebody versus somebody else? And what is the differences on interest rate with those?
Absolutely. I think that there's 3 really good points to make in answering your question, Sean. So number 1, a 30-year fixed rate is basically a mortgage product where you close on the home. Typically there is when the client, if they're purchasing a home, gets under contract, or maybe at the point where they're refinancing, they just give the lender a commitment. And an interest rate is locked, is really the term. And that means, if I were to come to you and say, hey, as of today, the rate is 6.31%, we're gonna lock that rate in. Essentially what that means is that between that lock, commitment, and your close date, you have that rate locked in, valid. It's not gonna go up. It's, there's some lenders that offer programs if rates get better that can go down. But essentially you're gonna close, and that is the interest rate you're gonna get. 30-year fixed rate loan is a product in which from your close date until the 360th payment, just to make sure the math there is right, 30 years is 360 months, the last time I checked, right?
Right.
So up until that 360th payment, that interest rate is gonna be valid. That's the interest rate you're gonna have on your loan for 30 entire years on a fixed rate loan.
Yeah.
What that offers people is a lot of security. You're able to plan. It's like, hey, if all else fails, I'm gonna be paying this amount for the next 30 years principal and interest portion of my loan. Now, even with a fixed rate mortgage, and this is a really big misnomer, can someone's mortgage payment still go up? We get this question all the time. The answer is yes, right? But not in the way that you might think. So when you have a 30-year fixed loan, really what that means, any sort of fixed loan, and it could be a 15-year, it could be a 10-year, a 20-year fixed loan, the term doesn't matter, it's the verbiage of fixed, means the interest rate and therefore the principal and interest payment towards the loan. So the actual payment going towards the mortgage is never going to change, right? For 30 years it will remain the same unless you obviously pay off, sell, or refinance the house. However, the homeowner's insurance and taxes, or maybe any applicable HOA fees, those things are all subject to change. Taxes sometimes slightly increase. I don't know that I've ever heard of anybody's taxes decreasing. That would be awesome.
Right.
But homeowners insurance can honestly go up or down. I know here in the state of Florida, sometimes we see that go up for a couple of years and then down for a couple of years. It does vary. And then if you have to pay any HOA fees as part of your monthly payment or mortgage payment, that's not common, but that could also be subject to change. Now, if we're to kind of switch gears, we know that a fixed rate offers a lot of security, it offers peace of mind, it's a fixed payment for 30 years, or whatever the loan term may be. An adjustable rate mortgage would be the opposite type product, right? Now, there are a lot of different programs out there right now, 2-1 buy downs, temporary interest rate buy downs, things like that. And I wanna call out and say those things are not an adjustable rate mortgage. They are part of a fixed year loan, and what I'm speaking about is temporary interest rate buy downs, things like one year buy downs, 2-1 buy downs, 3-2-1 buy downs, that they are actually a loan product for a fixed rate loan. But an adjustable rate mortgage is essentially a loan where you close on the loan and you have what I would call an initial interest rate. Let's say that rate is 5%. Now there is a period, and on this loan, you're gonna be given paperwork very far in advance. It's gonna tell you what to expect, and that's super important with an adjustable rate mortgage because your lender will really determine the period at which that interest rate will start to adjust. This can kind of be a tricky concept for a lot of people, but essentially you're gonna start out with that initial rate, and it could be, let's say for instance, 5%. And then depending on the period and the specifications of which your lender has set, maybe in 1 year that rate will start to adjust. For some people it's 5 years, for some people 7. I've even seen it up to 10 years the client can have that initial rate locked in.
Yep.
And then they will also determine what frequency after the initial period has passed will it continue to adjust. Now, really important talking point here, once the interest rate starts to adjust, it is based on the current market at that time. So Sean, you have to think, if your interest rate is locked in for 5 years and 5 years goes by, there's really no way for us to say the market will be better or worse in 5 years. Nobody here has a crystal ball, or we'd probably be making a lot of different types of videos, right? So it is a little bit of a gamble, right? Where we talked about a fixed rate loan offers security because you know what you're getting, whereas an adjustable rate mortgage becomes, as that initial period passes, based on the current market conditions. Now, the good news is the government has put really, really strict laws on how much adjustment these adjustable rate mortgages are able to actually change. Meaning, if you start out with a 5-year 5% interest rate, well, on the 6th year, there's no way you're getting stuck with a 10% interest rate. And typically there's very, very clear parameters on, hey, in the first year, the loan can only adjust, for instance, 1 full percent. Because what we don't want to give any client is something called payment shock. And what that is essentially one day you have a payment of $1,500 and the next day you wake up and your payment is $3,000. That would be really bad for pretty much anybody in any situation. And so there are federal laws that prohibit lenders from making really, really crazy adjustments, even on an adjustable rate mortgage.
Awesome. Yeah, so let's say somebody right now, they're scoping out some homes, they're right on the verge of making the move, but they're like on that edge of, should I wait for another Fed announcement? Like, what does a small rate cut affect somebody's payment? So should I try to hold out for the next couple of meetings? I hear it may come down a couple more times through the end of this year. Should I wait into 2026 to go ahead and purchase a home? And what difference would that make on my payment?
That is a great question, and it's almost like you read my mind, because we actually have a lot of people, this is like the question that they're asking right now, the situation they find themselves in. So I will say I really like to be focused on facts and not feelings. It's kind of a mantra that we have in our business. And so right now there are a lot of folks that they're hearing that the Fed is going to continue meeting. They've kind of promised a couple more rate cuts. We're specifically, it's November now. They're expecting that when the Fed board meets in December that they're going to experience another rate cut again. And we have a lot of people who are really considering maybe I should hold out. But really, I think it comes down to, let's focus on what I said, facts and not feelings here. It might really feel like that is the best strategy, Sean, but when we look at the data, and we really do track this for our clients, people in the past 3 years that have waited for the Fed to cut the Fed reserve funds rate have not gotten a better deal once they waited to go under contract.
Yeah.
It sounds very confusing, and you might be like, how does that even make sense? I thought they were cutting the Fed rate. But you have to remember, the Fed rate does not directly affect mortgage rates.
Yep.
And they are two different things, right? So what we have actually seen is there have been instances the Fed has cut the federal funds reserve rate. However, mortgage rates have actually gone up. I like to go back to this example. In September of 2024, from about the time, I want to say it was May of that year, the Fed had announced, hey, we are cutting the Fed rate. We're probably going to cut it 0.5%, just so you know, that's a lot. That's a really big adjustment for the Fed to cut the federal funds reserve rate by 0.5%. So for months and months and months, they kept saying, hey, it's 80% likely, it's 90% likely. And mortgage interest rates over the course of those months went down about 1.75%. All right, we saw the lowest interest rates we'd seen in almost 2 years. On September 16th, when the Federal Funds Reserve Board met, they cut the federal funds reserve rate by 0.5%. 50 basis points is another way that they like to say this. And mortgage interest rates actually soared 1.9, almost 2% higher over the next 120 days after. I promise you, every single person that waited to buy a home until after that meeting got not a great deal. Definitely not as good of an interest rate as they would have gotten had they purchased before the Fed had cut the rate. So with that in mind, it is not always the best strategy to wait. And we've seen this throughout history where typically people that have the mindset of, I want to wait to get a better deal. Now, I first want to say what we are definitely not promoting is purchasing a home when it's premature for your situation. What we mean here is if you don't have enough money for your down payment, if the payment is just way too much for you to afford, that's not really what we're trying to encourage here. But if you have what I like to call the means, the capability, and the ability to make a purchase, and you're waiting to try to get a better deal, and we're waiting for the federal funds reserve rate to get cut again, you may not end up with a better deal. I would really just consult you or encourage you to consult with your lender about what their opinion is on your strategy.
Yeah, that's super helpful. I mean, and as on the real estate side, right now we're seeing homes at discounted prices. I see rate cuts or pricing cuts all the time. This home is $50,000 less than it was. So people are really trying to sell their homes right now. So if you can even buy at a bargain, and you're saying maybe not wait at the interest rate, maybe that too could be a great combination. And even going into the winter months, it's usually slower for realtors in this season. It's when everybody's spending time with family in the holidays. When we've been buying, whether it's personal homes, fix and flips, this off season right now is one of the sweet spots as far as a window where people can go ahead and jump in, get a great buy on a home. And so if you are on the fence, like considering making that move, with that in mind, this could be a really good season. All right, so another question for you. What trends are we seeing right now? Are more people getting pre-approved, refinancing, or are they sitting tight?
Absolutely. Great question. I think right now it can seem there's a lot of things going on, economy, some global crisis and things. It can make things seem a little daunting. But truthfully, I think there's two types of people in this market right now, and it's the people who are waiting and the people who are taking advantage of some seriously incredible deals. So again, kind of back to facts over feelings, it's definitely easy to fall into the, I feel like homes are overpriced, and we do hear this a lot. I feel like there's just a point where home prices are going to have to go down. But when we look at the data and when we look at the facts and our business, the great thing about it, when you're talking with a local trusted realtor like Sean, when you're talking with a local lender like myself, we have access to so much data that tells us what's the market doing, is it performing well, what are home prices doing. And so what we're seeing is there's no data telling us home prices are going to go down, definitely not anytime soon. In fact, I would actually say year over year, we're looking at appreciating, which means value is going up between 3 and 4%. But what we're in right now, maybe why you've seen a lot of price reductions in homes on the market, is simply a window of opportunity for buyers. I would actually argue, and this may be a little controversial, it's probably the best time in the last 5 years to be buying a home. Meaning, yes, COVID had these really low interest rates, but we also had people almost pay 6 figures over the home's value, and they're just now seeing their home appreciate to meet what they paid for the house, meaning value has finally caught up to what they paid. Whereas right now we're having people get price reductions, lower price negotiated, repairs negotiated, and closing costs and or rate buydowns. Sean, I even had a client who we were able to get the seller to help pay off some of his debt, and we can go over that. I think you have another question you want to ask me.
No, that's great. You jumped right into it, which is great. I was interested to see if there is a success story, somebody who did, despite the rates being up, jumped into a loan on a home. It ended up being a great story for them. Have you seen that on your side of things?
Definitely. I think we have a couple. The first one that comes to mind, though, is we had a gentleman we worked with. I won't say his name, but he had been pre-approved actually with a couple lenders for quite a while, almost a year. And he really just could not find the right home. I think he had been getting a lot of not great advice from maybe some family members or people that had the best intentions, trying to give him advice on a strategy and what to do in the market, but they did not really have all the information to give him the best advice for his situation. His agent referred him to us just kind of as a last-ditch effort. There was one particular property he was interested in, and he really just had this really firm idea in his head. He had to offer like $100,000 less. Well, the crazy thing about his expectations and really what he thought that would get him is he did not understand that offering about $100,000 less on a property only accomplishes about a $600 lower monthly payment,
wow.
right?
Yeah.
$100,000 less in principal typically equates to about $600 a month. He was mind blown.
Yeah.
But what we actually did was put together an offer for him where the seller, and a VA loan is the only loan that allows you to do this, but the seller actually paid for his closing costs,
Wow.
some of his interest rate buy down, but also they paid off his car loan. Now, this might sound crazy to a lot of people, but it's perfectly legal. The VA loan guidelines actually allow for this. I'm not even kidding you. Rather than saving him $600 a month, Sean, we were able to have his agent negotiate for him a deal where he was saving $1,900 a month.
Wow.
Between the lower interest rate and getting the car loan paid off. That client was 10 out of 10. He probably had the best experience buying anything he'd ever had in his life.
That's awesome.
Yeah.
So for somebody watching this video right now, considering maybe purchasing or refinancing, what would you tell them is the first step in that process that they would need to do?
That's a great question. I would honestly say the best thing you can do is ask your real estate agent for a referral to a local lender. Now, this might sound really contrary. Why am I not telling people reach out to me directly? But I really believe in the power of trusted professionals. Sean definitely has experience working with myself and lenders in the Pensacola area, as do many other agents wherever you're watching this from. Those people have relationships with mortgage lenders that they trust and that have a track record of doing good business. Sean, we live in the world where everybody's on social media, everybody's marketing and advertising, and the truth is you never know how successful or how good a person is unless you're able to be referred to them by somebody who's seen them perform face to face on a real life basis. So I would say ask your realtor for a referral to a trusted lender, or even maybe multiple lenders. That's the number one thing you can do.
Awesome. So if you reach out to me, I would connect you to Rob so I can get you all of his info right there. But if somebody did have a question specifically for you, and thanks for being here, taking time out of your day. I know that you're super busy, but to take time to share with everybody here some of this stuff about the interest rate. But if somebody was wanting to get in touch with you for further questions, maybe it's about this or something totally different, what's the best way that they could get a hold of you?
That's a great question. So I would say the number one way is to either give me a call or shoot me a text, and my phone number, and this is my personal cell, 850-860-2090. And then if anybody would like to send an email to ask any sort of questions, some people, they have a list of questions, you can email Rob, R-O-B, Benson, which is B-E-N-S-O-N, at legacy legacymutual.com. And once again, I'm Rob Benson with Legacy Mutual Mortgage here in Pensacola, Florida.
Awesome. And I'll include that in the description below, so you can find all of Rob's info if you just want to scroll up, find his phone number there if you didn't write it down quick. So then that way you can get a hold of him. Hey, and mention this video, and you were saying you'd do something amazingly free for you would buy somebody a coffee if they came
Definitely.
to town. And if you don't live in town, I don't know, maybe you can talk them into buying you a coffee at your local coffee shop. But thanks again so much for joining me today.
Absolutely.
And I look forward to chatting with you soon.
Same.
Have
Thanks,
a good
Sean.
one, Rob. All right. So I hope that today's video will really give you some clarity on what it's like to actually purchase down here at the Emerald Coast, and whether maybe that needs to be sooner than later. But thanks again to Rob Benson for joining me today. If you are looking to relocate here to the Emerald Coast in the next 6 days or 6 months, I'd love the chance to talk with you. My info is all below in the description box, so make sure you reach out. I'd love to book a Zoom call so I can get to know you just a little bit. And make sure you like and subscribe to this channel, as we'll be touring all things Emerald Coast, and I'll see you on the next episode.